Welcome to the presentation of the financial statements and specifically the formats of our statement of profit or loss and other comprehensive income and the statement of financial position as per question 10.1. When we are going to deal with the statement of profit or loss and other comprehensive income as well as the statement of financial position, we need to remember that the accrual concept is crucial in these statements. The statement of profit or loss and other comprehensive income's purpose is to report on the financial performance of an entity, and that is usually measured over the past financial year. The financial year will usually be indicated to you in the required part of a question. So note the heading. First, tell the users whose financial statement you are presenting. Secondly, what statement are you presenting? And in this case, in the statement of profit or loss and other comprehensive income, it is for the financial year ended 28 February 20.8. Very important that you specify it's for the year ended and then the specific date applicable. We know that the statement of profit or loss and other comprehensive income consists of two sections. The first section is, of course, the trading section. Here we will calculate the profit or the loss that we have made on our trading activities. In other words, we are going to calculate the gross profit. Note that the revenue is basically our sales, and this represents the net sales, which is sales less sales returns. Also with regards to the purchases, we refer there to the net purchases, which is of course purchases less purchases returns. In this specific question, they deal with a periodic inventory system. And in this case, the trading sections format will be that we need to calculate the cost of sales. So we need to take the opening inventory plus the net purchases plus any other cost which we have incurred in order to get the goods so that we could sell it, like carriage on purchases, and then less the closing inventory. That will give us the cost of sales that is subtracted from the revenue to give us the gross profit. In the perpetual inventory system, we have total control over the flow of inventory, meaning that at any point in time when we have a sales transaction, we could calculate what the cost of sales were with those sales transactions. So in this case, when the perpetual inventory system would have been used, we would have just said sales less the cost of sales equals gross profit. Remember that the sales, again, the net sales, sales less any debtors allowances, and with the cost of sales, remember that any inventory deficits are closed off to cost of sales. In the profit or loss section, we will add any other income which we have earned to the gross profit, subtract any other expense which we have incurred, and then remember, each individual expense must be listed between brackets because every expense leads to the decrease of equity, and therefore the total expenses leads to the total decrease of the equity. So remember, show each individual expense also between brackets. And then with regards to the finance cost consists of our interest expense as well as the interest income. There they are offset against one another. If we subtract our other expenses, and in this case the finance cost, from the other income and gross profit, we will then derive at the profit for the year. Not only profit, not net income, the profit for the year. The statement of financial position's purpose is to report on the financial position of the entity. This can happen at any given point in time. So very important again with regards to the heading. Tell the users whose statement you are presenting, and secondly, what statement you are presenting. As the statement of financial position can be drawn up at any given point in time, you can derive from the required part the specific date at which this financial position is then compiled, and therefore in this case as at the 28th of February 20.8. The statement of financial position basically reaffirm the accounting equation that says assets must be equal to equity and liabilities. The generation of funds through equity and liabilities must be equal to where the funds have been applied to, the asset section. In the asset section, we need to distinguish between non-current and current assets. The assets are also disclosed at net realizable values, in other words, what we expect these assets to be worth. And also remember that the non-current assets are disclosed at the carrying amounts. That's basically the synonym for the net realizable value of our non-current assets. In the equity and liability section, equity is derived from the statement of changes in equity. The liabilities, we also basically need to distinguish between what are non-current and current liabilities. And then also remember that our liabilities are disclosed at the values we do expect to pay for in the end, the net realizable values. The figures appearing in the statement of financial position is actually calculated via the notes to the financial statements. Therefore, the notes are very important. And it also explains to the users of the financial statements where and how these amounts were calculated. We hope that you have enjoyed this presentation regarding the formats of the financial statements.